it's taking off. You'll see it in healthcare and a lot of different places, but right now it's one of the areas that's happening. We've got a great panel of individuals here today, and the individual that I have leading it for me is Lamont from DePaul University. Lamont's got a very interesting background himself, and I'm just going to give it over to Lamont's sake. Come on up, Lamont, let's take it away.
All right, thank you very much, George. It's a real pleasure to be here. Good morning. So, as George said, I'm at DePaul University. I'm a finance professor, and so this is kind of the FinTech session where we're going to talk specifically about blockchain applications in finance. So if you guys want to come on up, we've got 3 panelists who are going to join me this morning. And what I'm excited about is, this will give you a flavor of what some of the financial services firms are thinking about and exploring. So, I think all of us here are interested in the potential for blockchain, but there's still a lot of question about professional grade applications and use cases. And so, this is still very, very early stage stuff, but we're going to have a discussion with them about how they're thinking about it, what opportunities they're exploring. So we've got Collin Canright from Canright Communications on my far left. Some of you might receive Collin's newsletter, so he's sort of someone who's keeping an eye on this industry as a whole and can provide kind of a big picture perspective across financial services firms. And then Phil Flores from BMO in the middle. So Phil is with BMO Bank here in Chicago and someone who's actively thinking about blockchain applications. And then Micah Kerr on my immediate left, who's with Discover. And so, what's nice is you kind of have both traditional banks and more kind of card-based banks who are thinking about this both in terms of payments, in terms of credit, and so hopefully we'll cover a lot of those different areas. But well, I'm going to have a seat. Why don't we start with Micah, and if you guys could just introduce yourselves, tell them a little bit about yourself and your firm.
So thank you very much. I am Micah Kerr. I work for Discover Financial Services. Little disclaimer, we're not just a card company, we're a lot more than that.
Sorry, I know. As soon as I came out of my mouth, I knew I was going to offend you.
Not offended. It's something that a lot of people don't realize. So we actually have an online bank presence. We're one of the largest student loan lenders, personal loans, home equity, and we operate 3 payment networks, 4 if you include our commercial payment network as well. So my responsibility at Discover is I work in our business architecture strategy area where I focus on commercial payments specifically. And then I also sit within our innovation office where I look at blockchain technology and the use cases and how they could apply to Discover and our partnerships that we have.
Philip Flores with BMO Financial Group, headquartered out of Toronto, also here out of Chicago as BMO Harris Bank. Globally, we're about $744 billion in assets. My role within the organization is really tied to strategic initiatives within the Treasury and Payment Solutions Group. The core focus being how do we try and grow, be innovative, make sure that we can get to market with the right solution at the right time for our client base. Obviously, we cover the entire spectrum as a financial institution, from trade to investment to consumer business. But that's what we do, and I look forward to chatting with you guys during this session.
Collin Canright. I'm with Canright Communications, marketing communications firm. My clients are large financial institutions and technology firms, as well as non-technology financial firms. I also write a newsletter called FinTech Rising. I've tracked business-to-business payments for about 30 years, as well as B2B e-commerce, and have seen the evolution of these technologies over that time. And then of late, with the FinTech Rising newsletter, I track the news from a marketing and media perspective across all sectors of FinTech, payments, lending, capital markets, personal financial management, and of course, blockchain and cryptocurrencies.
Awesome. Thanks, gentlemen. Okay, so I thought we'd just go ahead and start with then telling you a little bit more about what they're thinking specifically in their unique context. Then we'll kind of broaden out and think about financial services applications more generally. So Micah, I'm going to start with you, and Phil, just to let you know, I don't think we have that slide in the deck, so you'll just have to do it verbally. So, as I mentioned, when I talk to banks, both large and smaller, my impression is that many of them are still in proof of concept. This is more of an exploratory phase, and so before you get your hopes up too much on something that's already ramped out, I do think we're going to get a little bit more of that from Northern Trust in the next presentation. But in this session, thinking about where are we with early stages and how do we continue to build. So, Michael, why don't you tell us a little bit about Discover's perspective?
Yeah, so from the Discover perspective, over the last few years, we've definitely been in an exploratory phase. We've done a lot of internal experimentation around it just to learn it and understand what it is while we look at the potential use cases for it. And one of the big things that we've seen is the adoption side of it and how it's been slow to adopt and what we need to do around that. And we've quickly learned that it's not something that we can just build ourselves. So we're always looking at how we can get the adoption through partnerships as well and get that wider view of the world and how we can leverage blockchain across that and not just try and stand something up ourselves and hope people come to that solution by ourselves.
So when I think about it, financial institutions are really deep diving into this from a few different perspectives. Some of it may be large scale, some of it may be small. And the reason why it's small is because people are slowly but surely dipping their toe in the water to see what is the practical application. How can I go ahead and use it within my various lines of businesses to make sure that we can be successful? And we joked earlier, when to use blockchain versus using a database to just maintain and operate within your organization. So when I think about our tactical approach, there's a few things that come to mind in the way we look at the business. So the first one comes to mind is digital identity, right? And I'll deep dive that probably later as we go through this conversation. Digital payments is another aspect, right? Where's my money? How do I know how to track where it's at? Not to just send it from a package, which may be sitting in the mail. Making payments, right? So how do you make those payments? Certainly not on the consumer side, but really where do you get your most bang for your buck? And that's going to be with your corporate payments that are taking place either locally and or globally. Also taking a look at digital contracts. You heard a lot about that earlier today in the sessions that have taken place. But really, what is the next level, and how do you go ahead and try and expedite the delivery of some of these digital contracts for approval, understanding where it's at, and ultimately when does it get signed. Another aspect is taking a look at deeds. So when I think about deeds that are out there, I think about auto renewals, I think about car financing. I also think about, from the perspective of even syndicated loans, and I'll lump it into this package for a quick moment, the ability to go ahead and track where a person may be with funding, what role financial institutions currently playing within that relationship, coupled with how much is being allocated from a fee generation perspective and who's encapsulating that aspect of what they're looking for. Something else that comes to mind is also, before I move off that, when I think about deeds, I remember reading not too long ago, I think it was in 2017, that the state of Delaware had imposed a mandate that said that in the next couple of years, our goal was to make sure that anything coming through was going to be digitally tracked. So no longer would you see a lot of paper transactions taking place. And I think about the huge usability as it relates to blockchain in that space. And then, of course, security settlements, right? Something a little bit more real, and what a lot of people are currently probing and playing with to see if, how do you manage the primary and secondary trade transactions that are currently out there? Do you do it in open source, and do you do it from the perspective that gives you the flexibility to be on the cutting edge as settlements start to evolve utilizing blockchain?
Great, thanks, Phil. So Collin's going to take the tail end of this question, and obviously not being with a financial services firm, but more of giving a broader perspective. So I'd ask Collin to kind of tell us, where does he see things as of today? So what progress do you feel like has been made in this industry?
So, I'm going to give you kind of a tour of the last few years and how we got to this point. And in a way, it's going to be a story of the Gartner hype cycle that the previous speaker just mentioned. I got really interested in this. This is like October 2014. And I'm at the Sibos conference, which was here in Boston. Sibos is an international banking conference. It's put on by the SWIFT organization. The SWIFT organization runs essentially the international messaging system for payments. And at the Sibos conference, all the international banks are there. They have an innovation track, and their innovation track is focused on Bitcoin. I've heard of Bitcoin in 2014. I knew what it was, and I'm like, why are they talking about an international banking conference? And they were. They weren't talking about it very positively. It was sort of like, what's going to happen when they get hit with the sanctions action? But they're talking about it, and I'm thinking this is, really something more here than just, the libertarian decentralized payment system that Bitcoin is supposed to be. But the question throughout 2015 was kind of like, well, maybe not Bitcoin, but what about the blockchain that it's built on? Could you have a blockchain outside of Bitcoin? Bitcoin peers would say no. The banking industry and the technology companies have clearly said, yes, you can. And, I'm looking at the news in my newsletter. I started the newsletter FinTech Rising really right at the end of 2014, and through 2015, as I tracked news, I'm focused mostly on payments, and my headline for the blockchain for that year was Blockchain Blues. It was just like, is blockchain going to disrupt banking? Are international payments going to be disintermediated by blockchain-type banking, blockchain-type systems? Well, not in 2015. But in 2016, everything was blockchain this, blockchain that, blockchain the other thing. I put a little subhead in my newsletter called the Blockchain Watch, because every major consultancy was starting to do their what is blockchain report. The large investment banks were doing their reports on blockchain investments. A lot of money starts pouring into the blockchain field. That was the case in 2015, but not to the extent in 2016. So in 2016, it's like the fear of missing out, blockchain, everything. You're kind of at the top, getting at the top of that hype cycle where, large enterprises are putting money, particularly in capital markets, to do proofs of concept and to see what can we use blockchain type systems for. I worked on a marketing campaign for a technology firm that used blockchain accelerators as their entree to the market. They did, what did we do? We did know your customer, we did trade finance, we did mortgage, the smart trade contracts, large. When I say large, I mean like mortgage, to do blockchain throughout the whole mortgage chain is a very major project. At any rate, our headline for that campaign was Blockchain Now. And it was kind of like the fear of missing out, you got to get into blockchain right now. And then in 2017, things kind of shifted to machine learning and artificial intelligence. You look at the headlines at the beginning of 2017, and that was really pretty much what the enterprise coverage was. And I think it's because it's a little bit more practical. Those technologies are more developed in many respects. They have use cases like fraud detection, which is very practical for an enterprise financial institution. And that was sort of what I was tracking in 2017. But then if you remember, even just like a year ago, the Bitcoin price is going high. And I'm going to shift a little bit and mix enterprise blockchain with crypto asset.
And you can provide final thoughts.
I will. I'm headed there. That's like, that was sort of the big story, was institutional money going into it. And as you get into 2018, things are very much more pragmatic. I was at a conference last week where the Central Bank of Canada was talking about one of their proofs of concept, and they didn't see like a lot of use for blockchain in their smaller systems, but if they look at trade finance, trade settlement chain overall, they're seeing good possibilities. So great.
Very comprehensive. Thank you, Collin. So speaking of pragmatic, my guess is some people here, that type of background and overview was a helpful starting point. I'm guessing we have some people here who are in financial services, and they're kind of wondering, okay, what can we learn about, in particular, Discover and BMO, how you're trying to approach this? And I know this is very new, so, you have to kind of take it as it comes. But Micah, one thing you mentioned was this idea of partnerships. And I think, when we first started hearing about blockchain, it was about disruption, it was about disintermediation, but now it's about these partnerships. But the other thing I've heard is it's very challenging for large financial services corporations like Discover Financial Services to partner with very small new startups. There's cultural gaps, and often there's technology gaps. And one of the questions that often comes up is, can you create some sort of internal sandbox to experiment? Because many of these corporations have these large legacy information technology systems that don't play well with startups. And how are you thinking about that?
So that's a great question, and I know we didn't talk about it, but a great question how we're doing it. We actually do have a sandbox that we do all of our experimentation on that sits outside of our normal systems. It's completely isolated, no production volume whatsoever. It's all experimentation. And we do like working with the small startups in that space as well. So we can do quick experiments. We can figure out if it's going to work or not, move forward with it, fail it fast if we need to, and get in and out very quickly at a very low price.
If I may just ask another follow-up,
Trade companies coupled with consumers. That's probably about the only space where you're going to see that adaptation truly take place. Now, what I will say on the flip side, when I think about identity and how do you go ahead and reduce the know your customer process when you're trying to onboard and do a verification of a company and the individuals, we're doing it for corporates. We're verifying the individuals that are holding the accounts, maintaining the accounts, have designation authorities. However, at the corporate level, if the information is stored in the blockchain, that's really the value add that we currently have. When I think about KYC, and I'm going to go cross-border here, right? When I think about North American, in Canada, probably not is process-oriented as it is in the States to try and get through KYC. It takes a longer period of time, but where we're finding that we're making great headway north of the border happens to be with individuals and storing the content. So we're still going to see as far as how we've been utilizing it, but we've had some pretty great traction take place so far. And again, that space and focus is primarily on the corporate side.
Okay. I'm going to ask Phil one more question, but then we'll have time for a few quick questions from the audience, and then I'll try and get a quick wrap up from our panelists. One final question to you, Philip. Public blockchain versus private blockchain. What I'm hearing from many firms is that public blockchain scares them because they don't know who's in the network. But there are examples like Quorum who are trying to build these things on Ethereum. So do you have any thoughts on where you see this moving forward? Is it more likely private blockchains?
Part of the it's a loaded question. All right, so here's my opinion. As I think about private blockchains, it's a great way to go. It's a great way to get started and to partner off small, as we were talking about earlier, with startups and or companies that are being more aggressive and expanding. Great approach and tactic to get to market. However, being public, there's something to be said about it, because unless you have the volume of the individuals participating in a network, you're never going to be successful, right? So you're just doing it for the sake of doing it, and at the end of the day, all businesses here are here for profit, right? So how do you do it to make sure that you're getting the traction that you need and growing and scaling? So.
Great, awesome. A few quick questions. Yes, sir, right here.
Yeah, Phil Carrier. I don't need a mic. I got a big mouth. I used to teach.
Okay.
My name's Phil Carrier. I'm on the board of directors for a business school at Robert Morris University and a 45-year technician. My question is probably to Micah. You mentioned there's resistance in taking in blockchain. And having been in technology all my life, I know where it's probably coming from. In the old days when technology came in, resistance came from management because they didn't pay the money. Are you seeing a lot of resistance to blockchain from the technical side of your organizations?
So I think that's where a lot of the issue actually lies. The technology is there. There's a little learn about technology use case. We've started identifying the use cases. We know the use cases. Now it's getting over that hurdle of we have to trust this new technology and use it moving forward. And I think we've done a great job with that with one of our external proof of concepts that we're working on right now with the Business Payments Directory Association. To set up a blockchain-based system to be able to look up payment credentials for a company when another company wants to make that payment. So we've gotten the support of NACHA and the Business Payments Directory itself to allow us to help build out that proof of concept.
Can you give us the name of that directory one more time?
Business Payments Directory Association, BPDA, which NACHA just took over within the last few weeks.
Okay, great. All right, we got one more quick question here, and we'll probably have time for one more quick one.
Thanks, Lamont. Private versus public blockchains, right? You've got the general fear, as you mentioned, about the public blockchains and so on, but there's commercial applications of blockchains internally in organizations. Now, you've seen that. So you've seen, for example, Discover or Vimo and so forth, the actual use of blockchains for internal, maybe it could be cross-border, whatever the case may be, but internal usage as opposed to public commercial usage.
So
Let's just have Philip go with that one.
So the short answer is yes. And the reason being is some of the different applications that I talked about earlier, that's where we're exploring and we're looking at how we can practically apply our solutions to help with how do we expedite payments. You see more of the payment transactions taking place internationally than you see taking place here domestically, right? But that's to come. Actually, I'll stop right there.
One more quick question. Yes, sir, over here. And then I'll have you guys just give your quick concluding thoughts.
So as we're moving forward, have you guys started to notice that with the interoperability, now that we're moving to some of these platforms that are allowing these, like say, the private blockchains to be able to interoperate with the public blockchains through interledger protocol and stuff like that? Have you started to see more of the business enterprises starting to understand that more?
So this is how I'll choose to answer it. Right now, the biggest challenge that we currently have with blockchain as I think about financial institutions is the ability to go ahead and, with lack of governance, I'll start off by saying, what is the compatibility, right? So are we on the same network? Are we speaking the same language? Can we go ahead and understand and recognize the information that's being pushed from one to another? The interoperability comes from being on different networks and potentially not being able to go ahead and source the information you're looking for as quickly as you'd like to. So the adaptation could be slowed down by that process. So, and I think that's where we will slowly get more traction as we progress over the course of the next, call it 2 years.
Micah, do you have a quick comment on that?
Yeah, I would tend to agree with that, at least from within a certain community, we'll say. It's not necessarily within one company, but across companies, having that private blockchain and allowing access to that through the various companies that are participating. So the public blockchains may not come into play yet, but they're definitely behind the
During lunch, we'd love to have those conversations with you. So for final comments, just 1 minute each, and we'll start with Collin, if we can, the mic to him. Just what's your outlook? Where do you see this headed in financial services?
I think, as we've talked about, we've heard from some of the speakers and from these gentlemen here, very pragmatic tests and experiments. that will lead to increasing wide scale usage. But I think the technology is being proved out, it's the scale still being proved out, and that's where we're at, into pragmatic use cases.
My closing thoughts are, it's critically important to continue to be involved in different views and forums where this topic takes place, because that's where ideas get formulated, that's where companies determine that they can fine-tune how they want to focus their business on the execution and utilization of blockchain. I also think, or what I want to leave this group with is, it's important to continue to go and push and think about the innovation aspect of how you can go to market and be successful. So one of the things we try to go and do is make sure we either work with startups and or established companies. We get past the initial red tape, not necessarily cost related, but maybe reducing some of the pressures we place on ourselves to be ultra conservative and think more openly and think about a fast track or adaptation of brand new solutions that can help companies succeed in the future. So that's really more of a statement, not just for financial institutions, but also for corporates in general.
Yeah, for me, and I'll give a little disclaimer, this is my opinion, not necessarily the company. But I also encourage you, from the conservative perspective, a lot of us in the FinTech area are very ultra-conservative, I would say. Think outside that box. I'd also say don't think of blockchain by itself as the killer technology per se. It's going to be blockchain along with other technologies like IoT and AI, machine learning, that the grouping of those technologies is going to be what creates the next best thing. You can't do it by just using blockchain technology. At the end of the day, you have to be able to trust who or what is putting the data on there. So with the farmer example, it's great that the farmers are doing it, but how do I trust the farmer? Unless they're using some type of device that I know can tell me exactly where that came from, that was the lettuce, etc., what temperature that was stored at, and all the rest of the aspects of that, I'm still not sure I trust it just because it's on blockchain. Give me some of the other things around that to give me that something.
Great, thank you. Just, if I may, my final comment. One reason I'm here is also because of the role of universities. So DePaul University, we're very excited in playing a role in this type of innovation. I teach a lot about cryptocurrency in the classroom, but now we're getting more interest in computer science, entrepreneurship in our law school. So to have a business school dean who thinks blockchain is the future, to me that gets me excited as a faculty member, because I fully believe in these ideas and the potential, and so I think universities have a role to play in helping move this forward. So thank you very much to George and the organizers. Let's give it up to our panelists.
Thanks, Lamont, Micah, Collin, and Phil. Great insights. These are people doing it every day. And in particular, Lamont touched on a point about bringing it all together. It's not just about big companies, it's the startups number you hear with startups. It's bringing universities. How do you build that pipeline and that chain going? So those are things that we're looking to do as well. So you've heard for some of the companies actually working on things. In addition to that, we've got